How's it going? Sorry, I overslept
Yo,
a little bit. How's it going?
what's up, man?
How you doing?
Doing good. How about yourself?
Doing pretty good.
That's
Just just woke up from a nap because I work like 12 hours today.
yeah.
So like the mornings is when I get to sleep.
Oh, no, I feel that, man. That's cool. I'm just getting off another webinar, so it's all good.
Yeah, how'd it going?
No, it's going good, man. It's going real good. So last one, this is more like really informative and just giving people like a chance to basically like work with me because usually my one-on-ones are like, well, I just up my price to 950 because I've been
Mhm.
helping people like pass FTMO and just get right as far as like their mentality when it comes to trading and how they approach trading.
Yeah.
And just like, a lot of the psychology stuff is really what helped me separate my trading because like a lot of people like can go to people and get technical analysis and, get all these different trading styles and learn, a certain type of edge to have in the market, but none of them really go over like, the mental aspects that it takes to trade. And that's stuff that like I really focus on is like, you know, just the things that we encounter by looking at money all day and, different currencies and stuff like that.
Yeah, like when you recommended the turtle book, trading like a turtle,
Mm-hmm.
when they were going over the different cognitive biases, that was like I was able to like kind of notice that in my trading and kind of like it was like it really hit hard because it's something that like it's the emotions that we just go through as a trader, seeing numbers all day,
Yeah.
having these types of setups. But no, that's really good. It's something that I feel like I really have been needing help with on my trading as well.
So just to start off, like, how long you been trading?
I got into trading, I believe, January of 2019, but I got into Wall Street Academy in November of 2019. And then from there, I've just been kind of, that's when I feel like my trading journey really started because like, that's when I started adapting into like Q's ideologies and methodologies and going about trading.
Yeah,
But yeah, I feel like I've been trading for like about 2 years now.
about 2 years. That's cool. Have you well, first off, what pairs you been trading over those 2 years?
Um, I paired hop a lot for like the first year, but the second year I stuck a lot to AU and EJ. But right now, primarily more on AU.
All right, cool. And as far as like consistency wise, like, are you pretty consistent?
Um, I no, I
No,
struggle a lot with losses.
with losses. Okay. What account balance do you usually start off with?
$500.
$500. And then what lot sizes are you using?
10% for the account. So sometimes I'd be like zero point 0.5 or zero point 0.4s with AU.
0.5. Yeah, that's smooth. So it's 0.5s. Yeah, that's a good lot size. Do you know how much drawdown you're usually seeing per trade?
Uh, that no.
Yeah, drawdown. And then do you know how many pips, like what's your pip goals like usually for the week?
For the week, I usually just try to aim for two good moves. So like 20% of the account um would be the goal.
Right. So you don't got so much a pip goal, you have a profit goal.
Yeah.
Okay, so you got a profit goal. Profit goal. That's two. You said 2%. You said
20% since I risk like 10% per trade. So
okay.
just yeah.
Okay, so 20% per week. Look at AU. Okay. That's what's up, man. Yeah, I started WSA like 2018.
Really?
Yeah, so I started 2018 and then went and took the 5-day course in like 2019. and then been TAing a little bit, stuff like that. And then I just decided to like start doing my one-on-ones with people and doing my psychology section.
Yeah, I see a lot of the one-on-ones on YouTube, and it's something that I'm 100% going to do this year because it's too much value right there.
Yeah, it's a lot of value, and that's why I'm really about to create my own like website and stuff like that I can start just uploading my one-on-ones up there.
Oh, nice.
I've been really doing them on YouTube because I've just been trying to build my YouTube fan base pretty much.
Mm-hmm.
Yeah. So what's like the first thing you look at like when you come on the charts and things like that?
So first, what I look at is like just where I am in the market. So like on a monthly, like where you're at right now, just what's the overall direction? Like so for AU, like on the monthly, the first thing that I notice is that let me just pull my chart. First thing I notice is that we're creating lower high points.
You can share your chart.
Okay. All right, can you see it?
Yep.
Okay, so just AU, first thing that I noticed is that we're creating lower high points, but our like in the short term, it looks like we're kind of like in a kind of a bullish move since we do have our bullish SMAs and the EMAs.
Right.
Right now, where we are, like at this point in the market, we can see that we did come off of consolidation from last month, and right now we're starting to see a little bit of buying pressure come into play. But this is barely like the second day of the candle, so it's not like I can base this candle off of much. But it looks like we do have a lot of kind of bearish volume. We didn't even really make an engulfing, but yeah. So first thing I look for is just kind of my structure and where we are, and the weekly time frame. We can see that technically we are in an overall uptrend since we broke a level of resistance here, and we never created a higher low point. So this was just a 23.6, and then now adjust the fibs, and it looks like we're coming like all we're seeing on the higher time frames is just a steeper retrace.
Right.
So based off the weekly time frame, we can see that the weeks looks like it's going to close as a bullish variation. And then you can see that this bullish variation on the daily time frame is just a break of looks like it's going to possibly be a break of a resistance that we're going to see on the daily time frame. Depends how Sunday and Monday does next week, but it looks like we do have a lot of strong bullish volume, especially since we crossed SMAs and the EMAs. So I just have to have both kind of like both the windows, that way I'm not lost on any of my time frames.
No, for sure. Yeah, because it's all one big system at the end of the day.
Yeah. And then on the 4 hour, we still have a lot of bullish volume, a lot of crosses. We have bullish SMAs in the EMAs.
How would you stop right there? How would you have, if you were looking to try to get into that continuation move, how would you get into that continuation move on this time frame?
I got in. I had two entries throughout this area. One was right here at this level was once the level of support was created, and another one was I believe it was okay. Yeah, I see it. So my first entry was okay. It was right here. This level of support. I noticed that on the 4 hour time frame, we did have bullish SMAs and the EMAs still, and then we were coming off a bunch of consolidation. Like we can see all this exhaustion and consolidation candlesticks, and we never although we did have bullish buyers exhaustion, we never really created any type of engulfing to tell us that there was more sellers and buyers at the market, and you can see that it maintained kind of at the engulfing line. And looking at the 1 hour, we can see that we started having bullish variations. I couldn't really place my fibs here because everything was at 23.6. And if everything was at 23.6, so all I had to do was kind of look at how price was forming at this point in time and look for just like a level of support to be created.
So the thing about 23.6 is, right, when you're at 23.6s and you're looking to try to enter into a 23.6 because we already expecting consolidation continuation, what is something that like you would do to make sure that like that volume is gonna stick? Like
check onto the higher time frame to make sure we have a lot of one-sided volume.
exactly.
So at this point in time, yeah, everything was saying bullish. We did have a little bit of buyers exhaustion, but it wasn't really any like levels of supports breaking. It was just more of a retrace. So I feel like it's more just how the market closed at that point in time.
So yeah, that was just a retrace on the lower time frame for sure.
So yeah, so looking at the 1 hour, we see that we started creating a little bullish engulfing all throughout this point in time.
And the thing about that area as well is like once you start seeing, once you already know that, all right, my moving averages crossed at my last support area that was at 23.6. Then we had that push up. Then we came back and had that minor retrace. But because my moving averages already broke back there on this 1 hour time frame, once you start to see that support like you about to go into now, that's when it's like, all right, it's pretty much starting to set up that transition area. And then that's when a lot of times I'll use my moving averages on the lower time frame to like get those real good sniper entries.
What do you mean like moving averages like on the lower time frames, like on like, your entry time frames?
Yeah. So like so you see how your moving averages already crossed to the left where that previous not there because that's your entry zone. Back previous data.
Oh
yeah, back there. So since seeing how that area kept supporting and your moving averages spread it aggressively right there, that and then you can use your other technical analysis to see that okay, it made a new higher high on this 1 hour time frame, and then it came down and made support, which once used to be resistance. If I look to the left, so now that I'm seeing that support. That supported it, right? So now that I'm seeing that supported that tested area, all of that's the confluence that I need. So now all I'm really waiting on is for my moving averages on that lower time frame at another higher low point, which would be H1, probably like M15. That's when we would see that transition area happen, and then we would be able to take an entry on that lower time frame along with those moving averages because the moving averages on the M15 are going to cross before H1.
Yeah. And I think on this one I got in, I think it was the M15. Oh, wait. Oh, shit. Yeah, like exactly like you said. So when the moving averages were crossed, higher low points started forming, even moving averages on the lower time frame started crossing as well. And then we're just creating higher low points and then building up the bullish engulfing as well.
Yeah, man. So what would be like your entry what was your entry candle on this time frame? M15?
This one. So I think I broke it. Oh, no. Okay, so I broke this one down on the M5 first because
that's
on
cool.
the M5 we were making lower high points, and then we're making lower high points, and then when we had this steep kind of lower high point, it was just all this was just a test on the steeper retrace. Like we never really.
So what could you have done right there to gauge that momentum? See when is it gonna switch from sellers to buyers again? Seeing that you had that steep retrace.
Use a tested line.
So in this case, in this scenario, you'll want to use your counter trend line.
Counter trend line.
Mm-hmm. So from where that area, with that top area, yep, and then find a good angle. Yep, we can spread it out some. Yep, like right up in there, those wicks. Yep, and then that's going to start to let you know when that transition's happening.
Okay, gotcha.
You see what I'm saying?
Yeah.
Mm-hmm.
And then you can even see like we started breaking minor levels of resistance right here.
Right.
And I think when we broke this first minor level of resistance right here, and then we created our higher low point. That's when I take advantage and I put in my first order right here with my stop loss based off of the M15 on the lowest point.
Okay.
And then targets were based off of the daily projection, since we are technically on an overall counter trend based off the daily time frame.
Right. Exactly. Right.
And then for this one, it was just the 78.6.
Okay.
So this is how.
Not bad. It's not a bad setup at all.
No, this one was nice. It was just around right here is when I started, like, around this minor retrace is when I started noticing those types of biases from the book. So like I had like one of the cognitive biases that I noticed was the recency bias.
Mm-hmm.
So it was because I was so like fixated on when is this gonna drop, like, because there was so much momentum on one side. I didn't want to experience that one drop that was kind of aggressive.
Yeah.
But that was me thinking of what wasn't there.
Yeah. That's why, like, one of the things I go over in my trading journal is just that emotion versus logic, like understanding, how you feel. So you felt like, all right, this could be that one drop, and started feeling like a pretty much like a sense of fear as far as because you were in profit, right? And how one thinks. So that's what we just covered versus what one knows versus what is actually factual. So what's going to be factual is what the market is actually showing you, right? And then the other thing is also realizing that no one trade, like, you want to get in your mind pretty much that like no one trade is bigger than the other, right? So you want to be able to flow in and out of trades, right? So, and understand that the money is just the byproduct. I know you hear Q say that all the time, but it's true. Like, once you really detach from the money and you start to understand, like, all right, this is just a byproduct of how good am I at this? Like, how good am I at this skill? How good am I at technical analysis and being able to maintain my psychology and being able to have perseverance bias to hit my TPs, being able to have what's the other bias I was talking about? Information processing bias. That's another thing. So how we perceive information, right? And the type of labels and things that we give to these candles, because these candles don't really mean anything. We give schemas and things like that to these candles that ultimately give us some type of emotion back. So because that's how we pretty much communicate with the market, right? So, and that's all these candles are, is the market trying to communicate with you. So once you understand, like, all right, I just need to be able to understand structure. I need to be able to understand in certain environments, what is it? What's my goal in this environment? What am I trying to get out of this market? And then making money. That's the last thing that you really want to, have on your mind. But that's what we're in this business for, is to make money, right? Mm-hmm. So that's why you have to also have a technical way of exiting your trades. That's why Q always said, I started off, when he was with AU, he'll say, like, yeah, I started off catching like 30 pips, 50 pip moves, and I got consistent at that. And then once I got consistent at that, my equity was growing enough to where then, boom, I could take on the next step. You see what I'm saying? Which is like maybe, 70 to 80 pips, or just up your lot size with that same 30 to 50 pips. You know what I'm saying? Like, there's different ways you could do it, right? Mm-hmm. So it's all about just having that plan and having that goal clear as day, and just understanding how we perceive this information and how we take on this information. And then it was this other thing I wanted to go over with you too. Hold on, let me get my notes real quick. I went over this with the last group. Yeah, having a probabilistic perspective. That was the other thing, having a probabilistic perspective, right? And that's what gets you into the point where it's like no one trade really means more than the other, because if you understand that everything's probability and all you're doing is using your edge, then it's like you're not going to get, like I said, so emotionally attached when it comes to the fluctuation of the market. Like, you're going to want to fluctuate with the market because you understand that's how you make more money, right? All you want to do is be able to understand, like, okay, is the market breaking a certain type of structure? Is the market playing towards my technicals? Is it staying above my moving averages? Is it like, what key information is it giving me to either let me know, one, I can maintain this trade, or two, I can start to scale this trade, right? Mm-hmm. So that's one thing else is like having a probabilistic perspective. Go ahead.
No, that was really good. I remember reading about that at, like in the book, and it definitely like kind of like it seems simple, you know. It takes the pressure off of all your trades. Like it doesn't have to be the winner. And that's what I feel like.
And that's the other thing is like you don't have to know what's gonna happen next for you in order for you to make money. You know what I mean? Like you don't have to know what's happening because all we're doing is taking previous data, right? And basically making, you know, this assumption of, you know, what we projected is gonna happen, right? Because you don't want to have expectations because, like I said, once you expect something, now you're emotionally attached to it, right? So that's the thing on having a probabilistic perspective. The next thing is just having organization and workflow. You know, like understanding your organization and workflow. It looks like to me like your organization is really good. I would say like, you know, like just make sure that you're doing more on your chart as far as like I really like how like on one chart you have like a plane chart and then on the other chart you have like, you know, your technicals, your exhaustion zones, your trend lines. Like I really like that organization flow. So I would say definitely keep that and just make sure that you're putting out like your structure points so that way you're not getting lost in the sauce. You know what I'm saying? Like you understand like, all right, this is a 4-hour wick, then, you know, understand like, you know, square it off or eclipse it or whatever and put like, you know, 4-hour wick and then go down to those lower time frames to see what is actually making this wick or even test its support or test the areas. What is making this tested area? Like, am I seeing that transition on the lower time frame to understand if these things are valid or not valid, right? And that's having that confirmation bias. That's what that is. That's just being able to confirm, like, all right, I'm seeing tested candles on this higher time frame, lower time frame. Am I also seeing, you know, that wave that I need to see or that break of resistance that I need to see that makes that higher high and that higher low point on that lower time frame to give me those tested candles on that higher time frame, right? So having that confirmation bias, like you don't want to miss out on any piece of information, right? So because basically that's the only way that we communicate with the market.
Right.
And then
I agree. I've had that happen to me where like there's so much information and I try to make like, I don't know why I've tried to make like mental notes and it just comes by to like burn me. Yeah.
No, it happens to the best of us, man. And that's why like I write everything down, bro. Like that's why I came out with journals because it's like writing shit down, bro. Like it helped me not only helped me far as like candlestick patterns and stuff like that, but it really helped me far as like my organization. Like it helped me understand how many trades am I taking per day? How many trades am I taking per week? Like not emotionally just hitting buy or sell, but like really calculating it and treating it like a business. You know what I mean? Because when you got a business, like you have certain ledgers where it's like, you know, you writing down how much you spend, you writing down, you know, how much inventory you have, how much, you know, all of these things you're keeping track of. So it's like, why wouldn't you do the same thing with this, especially when this is all about money? You know what I'm saying?
Right.
So it's like I created those journals to not only give people like different psychological perspectives, but to really help them understand like organization, workflow, and understanding how these candlestick patterns, you're going to see them later. So if it's like, boom, I caught, for instance, a 45 pip move off BTC and I seen the same setup, then it's like, boom, I'm going to be that much more confident. And I understand every moment in the market is unique. So it's not going to happen the exact same way that it happened the last time, but pattern recognition, right? So if I see that same pattern and it might line up with another confluence and things like that, then that just feeds my edge, right? And that's what I want to do. The next thing is pain avoidance mechanisms, right? It's going to probably be like the last topic I talk about, but the pain avoidance mechanisms is when we get so stuck, like for instance, how you were just saying, like we in this trade, we're maintaining, we're seeing nothing but bullish structure. It gives us that minor pullback, boom. If you put your fibs on that just to see what that fib level would have been from that push, point A, point B, Boom. So perfect 38.2. It never broke 38.2. So we really don't have a reason to get out of this trade. It never really broke our moving averages as well. So it's like when you're thinking about, when you're looking at things from an optimistic perspective and you're not emotionally attached to it, like seeing like, damn, my profits, I might have had $500 and now I'm at 250 or 200. You know what I'm saying? Like
Yeah.
when you're not thinking about it like that, then like I said, the money is a byproduct because yeah, you looking at it like, damn, I had 500 and now I'm at 200, but you're not looking at, all right, it just touched a 38.2. So really I'm projecting, not expecting, but I'm projecting an aggressive push to my negative 27%. So instead of 500, I could potentially have 900 instead of this 200. You see what I'm saying?
Yeah.
But it's the way that you approach it and the way that you're thinking about it. But if that 38.2% was broken and I ended my trade with $200 or whatever the case was, then that's just that one trade. You know what I'm saying? The best thing about it is I followed my trading plan. I didn't let a winner turn into a loser. And the thing about it is I grew my population size of trading because I'm good to trade again. You see what I'm saying?
Yeah.
Versus that person who was like, oh man, I could have had 500. Damn, I got 200 now. You know what I'm saying? But so now you chasing the market and then you end up getting in at the wrong time, wrong environment, and then boom, you blow that 200 too. You see what I'm saying?
Yeah.
Like versus that's how easily the mindset can shift and then you be in the wrong space. You see what I mean? Because we all know that winning is fragile. Being on winning streaks is fragile. It's the same with this. So that is an example of pain avoidance mechanisms when it's like you pretty much don't see what you need to see because you're so fixated on this like one thing. You know what I mean? Like it's like unconscious or consciously you're not seeing all of the data. You see,
Yeah.
because it's like you associate those bearish candles because you're in profit. You're associating the opposite of the bullish candles, of course. So the bearish candles, you're associating them with fear. You're associating them with taking your profit. You're associating them negatively, right? So when you're associating them negatively like that, that's the pain that comes in, and your body, your mind, subconsciously, like I said, is going to try to do whatever to try to help you avoid that pain, right?
Yeah.
Sometimes you won't see everything that you need to see. So that's why you have to see things from an objective perspective.
Yeah. And it's crazy because you described it like perfectly, like that head shift that you can get is kind of like it's complete opposite. That like when I was just this minor retraces, it wasn't anything big. It was just a 30.2, 4 hours to have a lot of like, volume. But when I was at this point in time, like I just started overthinking things. Like it, I feel like my rational thinking just wasn't there like it needed to be. Like I made things a lot more difficult on myself than it had to be, rather than just kind of flowing, maintaining the 38.2, and just if I lose, I lose. If I win, well, I followed my rules.
And that's how I got to be every time because you got to remember that you're playing the long-term game.
Yeah.
You know what I'm saying? That's the biggest thing. That's the biggest thing in this whole thing is like we playing a long-term game. So when we playing a long-term game, as long as you following a certain system, then over time, you see what I mean? Over time, you'll start to see the type of results that you want to see as long as your system stays consistent. Because you're gonna have them trades where it's like, okay, this trade might have went for 30 pips. Then the next two trades might have went for 55 pips each. You see what I'm saying? Now I got stupid equity just off 3 trades, you know? Or say it took me 7 trades and I'm catching 20 pips per trade. It don't matter. As long as you're keeping a certain system, you know what I mean? It's gonna be them days where the market just keep going. It's gonna be them days where you thought the market kept going and it came back and hit your trailing stop. You know what I mean? That's why you have to be methodical and mechanical in how you approach this.
Mm-hmm. Yeah, that's something I feel like I have to just work on making sure I have my mental right, and that, like you said, just follow my system. Like also remember another thing from the book that I wrote down was it isn't really a loser, like unless like if you're following your rules and you're following your system, it isn't a loser because you followed your system. That should
Exactly.
be the main priority to trade right, to follow your rules, and to be profitable.
Yep. And then the other things I wanted to go over is understanding that we want quality setups. So we want quality over quantity. I love how you say like, yeah, I usually start off like trying to get like two trades per week. That's fine. You know what I'm saying? It's just I mean, on AU, you're gonna be waiting a while, but that's still fine. That's, you know what I'm saying? Like if that's your
Yeah.
parent, that's how you see things, that's cool because it pays. Any currency pays, like as long as you know how to read it and you know what you're doing. But we want quality setups, quality entries, right? So that means we have to be patient first and make sure that we wait on what we need to see and wait on how the market plays out towards our technicals. We're not chasing the market with our technicals. We're laying our technicals based off previous price, and we're letting present price play off of our market. I mean, play off our technicals so that way we can therefore project future price, right? And execute to project future price. So have quantified entries, man. And like I said, always exit based off of your signal, based off of your fibs, have a methodical way that you also exit, just not enter. You want to make sure that you replace the anger or animosity or emotions towards the market with respect for price and emotionless trading, right? So you want to make sure that you just being able to flow just like the ocean. You want to be able to flow in and out of trades. You don't want to be stressed about your trades. Your first thing you can do is protect your mindset, and that's by protecting how much you want to spend on each particular trade. Right. So if I'm know for example, if I know I'm in this 23.6 area, I'm not gonna be I don't want to spend, you know what I'm saying, a bunch of money on the 23.6 area because I know that could consolidate, continue, or it could consolidate and really do the real retrace, right? Like we know that based off of our fibs. So if I'm in that pretty risky area, then if I'm used to doing a 0.5, then I might do a 0.2. You know what I'm saying? Something like that, just to offset it. And then once I see things going into my favor, then now I have the opportunity to scale in with another 0.2, if I want to, or I could just chill, or if it does that thing like Q always says, where it does that 23.6 go up and then come back to really make that 38.2, then it's like, boom, I'm not really missing anything because I could put the 0.20, wait for it to come back, retrace, and once it hits that 23 points, that was once that 23.6, now 38.2, boom, I can put the other 2.0 in. And now I'm back at that 0.5. You see what I'm saying?
Yeah.
To get to, and I got double confirmation, double confluence on what my projections are. So that's how I do it as far as like emotionless trading. As far as uncertainty, you want to make sure that you accept the randomness of the market. Accept that anything can happen at any particular time, right? That's why we protect our trades. That's why we protect our initial investment capital, and that's why we want to get in a position to really just play with equity, play with our broker's equity, right? So once we get in, over a certain leverage over that initial investment capital, we don't want to go back into our initial investment, right? We want to keep building. So even if that means taking a couple of trades with smaller lot sizes just to build that cushion room, that's what you want to do. And it takes discipline, right? It takes discipline. It takes a certain mindset, once again, like I said, and you have to approach it from a goal-oriented mindset in order to be able to do that. Okay. So another thing is you want to reduce your stress. You know what I'm saying? And that's by back testing. That's really how you reduce your stress in all of this. You want to make sure that you back test, use your replay tool, find certain areas in the market like we just did when we was back testing. Really, that's what we were just doing. We found a certain area and I asked you, hey, how would you go about this certain continuation move? And boom, you broke it down beautifully. I'll look for this, look for that. Boom, add a couple things here, and then boom. You know what I mean? Like that's how you do it, but you do it all the time. You put hours and extensive hours into it, so that way you're training your mind to see certain things. So that way, when you're in the live market and you're seeing this live volatility, it's not so much scaring you because you already have your mindset fixed, right? And then greed, of course, we got to tap on greed. Just replace the need for immediate wins. You know what I mean? Yeah, the what they say, the seed that you plant today, you know, it isn't gonna reap the same day. You know what I
Oh,
mean?
yeah.
Yeah, something like that. But it's like pretty much, you know, when you putting in trades and stuff like that, understand that like you don't gotta make the most in 2 hours or had this crazy amount or go right into profit in 30 minutes or you know what I mean, especially with your pair, you know what I mean, you have to be extra patient, you know, so just understand that and understand that greed does play effect. So that's why we exit methodically, right? So that helps us out with greed too. It cuts that in half, right?
Mm-hmm.
The next thing is fear. You definitely want to replace your fear of failure with confidence in your system. Confidence in your system. That's the biggest thing that's going to help you. And how do you get confidence in your system? By trusting your system, by having discipline within your system. That's how you build confidence within yourself. You're not just going to get up here and just be like, all right, yeah, I'm going to catch 50 pips, da 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 da. Because once the shit get live and you get in them consolidation zones and you get in different parts of the market that you got to be able to think through and maintain your psyche through and maintain your orders through, it could get kind of wild, right? We all been there. So it's like you got to replace that fear with confidence. And that's by taking things head on, right? For understand right down tonight, you know, for our session tomorrow, write down tonight like things that you're really fearful of when it comes to being into the market, so that way you can start attacking it head on, right? And a good trader is a good business person, you know, and they're not a gambler, right? So I'm gonna read that again. A good trader is a good business person and not a gambler, right? So they're not gonna be gambling. They're not gonna be taking things based off emotion, based off how they feel. They're going to be methodical. They're going to be statistical. They're going to be objective to how things are, how the business is going. And they don't look at losses like losses. They look at them like learning opportunities, and they look at them like business expenses, right?
Mm-hmm.
So calm traders really keep a level head and they maximize their opportunities in the market when the market presents them. And that's what type of traders we want to be. We want to master our patience. We want to be able to trade comfortably. We want to be able to maintain our calmness and close in profit. That's what we want to do. We want to master our patience. We want to be able to trade comfortably, maintain our calmness, and close in profit. That should be our goals.
I like that. When it's broken down like that, it seems a lot simpler, a lot less
Yeah,
intimidating.
man. Like somebody told me before, trading should be boring, bro. It should be boring. Like you should be analyzing 80% of the time, only really trading 15, 20% of the time. And then, you know, other than that, it's really boring. You really just sit here, you know, back testing, watching the live market, watching, you know, but you shouldn't be like fixated, like, oh, I hope it goes in my favor. Oh man, like it went down 3 pips, man. Like I'm, you know, like bugging out and freaking out and stuff. Like, nah.
Yeah.
Shouldn't be none of that, man. You should be calm, cool, and collected. You know, understand that you have a skill and you're doing something that a lot of people aren't able to do or don't have the mindset to do. And have the long-term vision. Have really create your long-term vision of what that generational wealth look like for you. You know, and that's another thing we really gonna tap on tomorrow is the difference between wealth creation and then creating generational wealth and stuff like that as well.
Okay.
Yep, man. But you got any other questions? Anything?
Um, as of right now, no. This is really good. A lot of this is things that I needed to hear, and a lot of like I need improvement on all of it. You know, on everything psychologically, maintaining my orders, and like you said, have exit signals instead of being fearful or having that type of recency bias or that pain avoidance.
Yes, sir. Yes, sir. Good terms, man. Those good terms. Good work. So we're gonna tap back in tomorrow, same time. All right.
All right, 11 a.m.
Yep, 11 a.m.
All right, sounds good.
All
Thank
right,
you, Mark.
brother.